Hello again. This is just a short add-on to this week's market update video and our planning video. I try to be very, very careful and keep those videos short enough, and I know that the normal Tuesday video got long, and this would just have thrown it over the edge. So since this is more of a month of May video, I figured I'd put it on its own. So you'll see a couple of these other ones hopefully coming out, little ideas that I wanted to share with you, but didn't really fit in either of those videos, and certainly for time-wise. Last Wednesday, we sent out an LPL research email entitled Time to Sell in May. I've attached it here for you to read if you like, but here's a short video recap of some of that information. Sell in May and go away is one of the most common market concepts this time of year. It actually originated in England, and it actually was sell in May and go away until St. Leger's Day, about a horse race that was in September, but that's not the point of today's video. The sell in May and go away is about the seasonal pattern in the market, May to October, and the historical weakness of that time period. The idea is to go to cash during that time, as the 6 months are the weakest of the year. Since the 1950s, the S&P was up 1.7% on average in these 6 months. That's versus 7.1% from the November to April time period. So as the market's up almost 90% from the March 2020 lows, it may be understandable for this market to take a breather. So let's add some additional facts to this. In May, in 7 of the last 8 years, the month of May has been a positive return month. So maybe it should be sell in June. Also, stocks in May on a post-election year have been the third highest monthly return, 1.7% on average, only trailing July and November, which have beaten them. The point, as the attached LPL research adds, is not just to sell due to the calendar. Just be aware of the volatility that comes along in the summer and the fall. There is a catch. These worst 6 months of the year, the sell in May idea, have been pretty strong lately, gaining in 8 of the past 10 years. So while we may see some weakness, we think it may serve as a good buying opportunity. A few more facts for the next 6 months. When April is up more than 5% as it was this year, the next 6 months are up 6.2% on average. That's well above the 1.7% average. Post-election years average 2.4% during these months. The best 6 months of the year just ended, up nearly 28%. On average, the next 6 months are up only 0.7% when the previous 6 months are up over 20%. Interesting. When the S&P 500 closes at a new monthly high in April, like it did this year, the next 6 months actually do better, up 5.6%. If you look at all this together, put all this together. You ready for this one? The last time the S&P 500 closed April at a new monthly high, up at least 20% in the prior 6 months, and did that in a post-election year, the next 6 months were up 5.1%. Did you follow all that? That's not so bad. You're going to hear a lot about this. So with all that's happening, remember to keep an eye on the calendar. But remember, with an improving economy, massive fiscal and monetary stimulus, rising vaccination rates, we don't expect pullbacks to last very long. They may serve you well as buying opportunities. They may, depending on how your goals are set. Keep an eye out for market update videos. Those come out on Tuesdays, of course, and we'll keep you informed as that goes along. I hope this allows you to better understand the sell in May and go away. It's not just about when traders go up to the Hamptons, though that's true also. So have a good rest of your day. We will be in touch next week.